All right, welcome to today's meeting or market review for this coming week, 20th of February to 25th of February. And by the way, that's basically the last trading week. And usually in the last trading week, we usually get a lot of um, just because the last week of the month, so you want to be sure that we're going to have some sort of news drivers, economic events to drive the market. All right. And just before we do that, I appreciate you all that has been going through our content and nice words so far. Right. This past week we did analyze. This is pound dollar. We did analyze that our objective for this immediate past week was this low, right? This is the daily chart. We analyzed that dollar should take out, pound dollar should take out this low and eventually come to this fair value gap right there that you can see. By fair value gap, I'm going to take a little bit of time to explain that in this video, so you want to stay till the end, right? And it's a very powerful concept you want to understand. If you have followed us for any length of time, you would realize this box right there. We talked about price getting there and dropping, and now we are going to look at something else for this week. Now, for this past week, price did not readily run to this level. Obviously, all of the actions still going on in this last down close candle, or what you can call ICT bullish order block, right? And we did have some significant run this past week, being that the CPI was released on Wednesday of this past week, and CPI is one of those days where you see some sort of crazy market condition. So it happened on Tuesday. All right. So what basically happened? We were here on last week Sunday to Monday. We expected price to do that little bit of drop to that area and then just cascade. But um, two things we're going to learn today quickly is what we call liquidity pool. So you see, price was not going to have any of what we said, and that is why no matter what you know as your entry or your exit strategy, especially entry, you want to have a confirmation, some sort of confirmation. So there was nothing here that would have made me started selling this trade or this market on Monday, right? In fact, this little bit of movement didn't take out that low. You can see that line right there. It was just um, perfect. If there is anything at all, I was suspecting the buy movement. That is one of the strategy we have taught in this channel, but I'm going to take out the next probably the next video to teach about that very simple strategy. I think we did mention it once some time ago, but we are going to repeat that just in case you are joining us for the first time. So what you want to do at this point is to subscribe and then turn on the notification bell, so you'll be the first to be notified when we drop that video. So the Monday that passed, we had price consolidated during Asia stroke London, rallied up, filled those fair value gap, which we'll look at when we are discussing fair value gaps, went high, took out this liquidity and closed there on Monday. On Tuesday, price came out, went even higher, took out that liquidity right there. And during CPI news release, right, there was that market crazy or frenzy. You see this candle in the session, huge wick to the upside, huge wick to the downside, and this is typical of CPI. So these are days you do not want to be trading the market, or these are time you want to just wait two or thereabout hours after the CPI news release. The same thing with NFP, the same with FOMC. These are very important news, and that's why you want to be conscious of what exactly is happening. Now, whether you like it or yes, these weeks did a whole lot of damage. People blew their accounts on these days, and you want to be careful. These days or this time of the days are not going to be happening every day, so you want to stay away. Right, as a newbie, you want to stay away from this. Even at my level, I've been trained not to interact with the market on this time. Wait either several hours later till you get your signature entry, or better still, wait till the next day. If you are trading before that time, you want to exit. Probably you were buying or in this trade up there, you want to exit when that liquidity, this line was taken out, and wait for what was going to happen. So that was on Tuesday, and it was disastrous for people that were undiscerning. All right, for those that were undiscerning. Then on Wednesday we had price just fell, free fall Wednesday. Just it started moving our direction on Tuesday when the high of the week was formed. And these are nothing you want to learn. If you are bearish like we are bearish in this current week, I'm going to share that with you. You want to be sure when the high of the week is formed, so you can look to position yourself and get a nice entry all the way down. And if you are bullish for the week, you want to try to position when you want to start buying from the low of the week. In fact, I will, okay, this video will be edited, so I will show you the screenshots. I did took an entry right there over 250 pips because I exited right here, and I will tell you the reason why. So probably you might be seeing the screenshots of our trades this past week right on from that area. Why someone that got on that entry right there. There was obviously nothing to enter here on this day unless you are just falling based on our strategy. But on Thursday we got on that entry right here, and then on Friday I was expecting. Now something to take note about Fridays is that if you are bearish all week long, expect Fridays to be bullish. This is just something you need to know, right? Friday is a profit taking day for the dealers. Why? If you are bullish all week long, expect bearish movement on Friday. It's just a norm, right? It's just a norm. Now you may be wondering why I have this red line here and this box here. I did all of those before coming because this is something you want to really know also in at the back of your hand, that if you are bearish, all right, and then you can extend your fib2 from this high right here, okay, to this low. Okay, I think yep, actually did it. I actually did take it from the other high right there. Okay, so from that high on Tuesday to the low of Friday, notice I am concerned with the bodies, not the wick, because the body tells the story. The wick just shows the manipulations or the yeah, manipulation or destruction that has been done by the dealer. So what I did was to place my fib2 from high to low and mark out took out this red line you see here, shows you the 50% level. Excuse me. Right, should. So I'm going to put it at that 50% level right there of my fib from high to low, and I'm going to take out the fib2. So what this means, according to ICT, for every range high to low, the midpoint is usually called the equilibrium. All right, an equilibrium is like, of course, midpoint. So if you are bearish in a market scenario, you want to wait for price to come above the equilibrium before you look to sell, right? Then the bottom half is what we call discount, right? If you are bullish, you want to wait for price to come all the way to discount before you buy. So very simple example. I don't have any tool right here. Because you see this mini bull run that happened on Friday, if I am going to join this party to continue the buy, it will be wrong for me to buy up there where price currently is. Do you understand? Why? Because I have just said I am bullish. So you don't buy anywhere because you are bullish. You will have to buy at discount. So I just took my fib2 from low to high and placed it right there, and I'm going to put a line at the 50% mark, which I just did, right, and take out my fib2. So everything above the 50% line is my premium. That is a sell area. Everything below my 50% line is my discount. So because I'm in a bullish momentum in this scenario, buying right there is wrong. I will have to wait for price to get here, anywhere in this area, before I buy. So I'm going to do another video that will be giving you more detailed by area, but it suffices you to know in this video that you buy at discount, so you want to allow price come this area before you buy, and you sell at premium. So I'm going to take out this, right, and show you a classic example. You can see this trade I told you we took on Thursday in our signal. You might be seeing screenshot of how that played. Of course, beautiful trade. How did we take the trade? Right there. You don't need to chase price down because price has done one stuff, and that is something you want to learn, your ability to wait as a trader. All right, so we have this from low to high. Price did that on Friday, and we're like, man, I've missed the move. Now, if you know what you are doing, you do not need to chase price. So I'm going to put that line again on that midpoint 50% mark. That's this red line here connotes the midpoint or equilibrium between that high to this low. So I had to wait for price to return back to that area, all right, because we said above the equilibrium is what you call premium, below equilibrium you call discount. So if you are in a sale program, or you are in a bearish market, you want to only sell at premium. All right, so this line here shows the midpoint from that high to this low. That is the midpoint. So I needed price to come to that area before I sell. So what I did when price was down here, I gave those guys a sell limit up there. So right, so price had to come there, pick it up, target profit was here, and then it took out 960 pips. A very simple trade. All right. By the way, to be part of our signal room is absolutely free. You just need to fund your own account with our broker link. Of course, you would see my details. Send me a message on WhatsApp. We'll discuss that. We are currently running a challenge. I don't know when you are watching this, a 10 to 15 S challenge and all that. So look at the details in our description, and you may be opportune to have or participate in the next challenge. By the way, you just need at least 40 to 50 USD. You're not sending anybody the money. It's to deposit in your own account, then trade with us. It's just it's for free actually, right? Okay, so let's continue. So that's that. Now, why did we have this line right here? Because we just measured from that all the way high to this low, and then we said this is the midpoint. And because we are in a sale program, and why are we in a sale program? I'm already giving you the analysis for the new week, this current week. Back to the daily chart, we want to see price run all the way down, take out this low this week, and probably if it gets very volatile, fill this fair value gap right here. So we are bearish overall for the week. However, we will not just start selling because we are bearish. That's the point. You want to wait for price to come all the way to your premium, anywhere above that area. And I noted this box here shows a fair value gap, and I said I was going to just say something about fair value gap. I will explain that more concisely in another video, but for this video it suffices to look at this huge black candle right there. Look at the candle before it right there, the low of that candle, and then the candle after it right here, the high of this green candle. Notice there is a gap between that low of that candle and the high of this next of the green candle. When you look at it, both of them through the body of this middle candle. This is what ICT refers to as CB, sell side imbalance, buy side inefficiency, or for short you can call it fair value gap. All right, ideally candles ought to overlap. All right, so if I'm going to give you an example, like again, I'm going to do this extensively in another meeting, right? Not just this one. Look closely. I'm going to zoom this in. Look at this huge candle. Now you are concerned with candles that has velocity like this one, not just tiny candles with velocity like this one here. In fact, let's look at the next one. So let me show you how price is effectively traded. So I'm going to rearrange all of these things back. Look at this candle right here. Look at the candle before it, that low. So I'm going to put a line on that low right there, and look at the candle after it, this one here. Can you see how the high of this candle, right, interacted with the low of this candle? This is what you call market efficiency. When the low of the candle before a candle of interest, which is this big body candle, the low of the candle before the candle of interest, all right, interact with the high of the candle after the candle of interest. So look at this high and this low interact very well. So this is a perfect market efficiency trade, all right, and this is important for price action. You need to see that happening. But when there is a space, look at the very next candle. Let's not consider smaller candle. Let's look at this huge candle right here. So I'm going to look at the candles before this body candle, which is this one, the low of it, and then the candle after has a high right there. You can see that. So this little space right there is what you refer to as imbalance or a CB or a fair value gap. So the price of the next set of candles has to fill that imbalance. Can you see how all of these candles came and they were trying to slightly fill that? This is perfection. It doesn't get more perfect. Now again, we are going to have training on this, but it is just as I have told you. I'll just put a little bit of more stuff into it. So let's just go ahead and wrap up for the week. So that box right here, all right, showed you the same thing. The low of that candle and the high of this candle left a gap open right there, and that is what you have as your fair value gap. And then we have been able to check out the 50% mark of this entire range to be somewhere around there, right? So I'm going to take out this line so the chart will not be too messy. So we had that as our 50% mark from that body's high to the body low, okay, and so this perfect our 50% mark. So this is our equilibrium. So because we are bearish, and remember this line is from the daily, this is a low, want to see price takeouts, and then we have that gap right at the bottom after this low. And now just merely looking at this video is getting too long. We expect somewhere around price as oops, I'm using the wrong tool. Merely looking at this, we're actually expecting around roughly around 250 pips, and if it goes more, we have more position down. So there's a lot of money to be made. Look at the example again of a fair value gap as we wrap this up. I saw something. Look at all of this huge candle right here. Can you see that happened some weeks ago? All right, we did emphasize it, and that's why you see price got here and dropped, right? Then this happened this past week and then dropped. So that area right there, or that candle, let's go back and look at it right from that candle before that candle's low. So let's do that because of emphasis sake. That low right there and the candle just after it right here. So all of these areas are fair value gaps, okay, heading into, they were not being traded completely. We had price entered it last week, then this past week started here, and you see how price went all the way inside to close out the gap. You see, this is perfection. So I'm going to take it out to clear the chart a bit. That is perfection. Every fair value gap will be covered, but it's a matter of time. So that is why this one here is our interest. So we want to see price, did I get that thing correctly? Oops. Okay, that's a cursor. Insert lines. Am I gonna be correct? Okay, so you want to see price do this inside that premium, right? And then finally pulls back all the way down. Okay, I think I even have it here. My trend line, okay, to that area down. Very important. Okay, and of course we already projected it all the way here. So as a for your action, you want to see price open on Sunday night into Monday morning, rally all the way down, right, all the way up here, and then start dropping for the week. Now there are variation on how this can happen. I don't want to bore you or keep this video to be too long, but sometimes on Monday, Sunday into Monday, you might have price come a bit lower to fake sellers, and people think that is a real sale. No, the sale can never or cannot happen until price gets to not necessarily our area. It must get to our premium, not necessarily covering all of these fair value gap. Do you understand? So price can actually start coming lower to induce through that, and that's typical of Monday morning. So people will start selling. All of a sudden, it start going up. Take that stop loss, take this one out, take that one out, all the way there. Might take up to Tuesday, and then the sale will continue. Right. So for this week, you want to pay attention to that, and yeah, you want to study that, and it's going to be quite simple. Again, we have about 250 pips to be made right here. Now you're going to see this thing play out most likely. Now this is not a signal service, though we have a signal service, but this is not signal. Remember, this is all financial. This is not a financial what's it called now, financial service. It's just a disclaimer, so you take note. I'm not telling you buy here, sell here. We do not have such rights here on YouTube, but this is just for educational and entertainment purposes, right? So we're looking at price to drop all the way down here, and when you do take this trade, let me know about it. Once again, if you want to join our challenge channel where we do talk about not talk about where we actually trade some of these stuffs more practically, reach me out on WhatsApp, or there's a link right on in the page. You may want to go see what it entails. At least $40 to $50 your own funds, create an account, deposit, and you can be part of what we are doing. It's something huge, and by the way, there is a gift for you. So check out the website, the link in the description below, and please let me know how these videos are helping you, right? And tell me exactly what you want, how to make this better. I want to get your feedback. I'm not doing these things for myself, okay? But these are stuff that should play out, and the goal is to get you profitable. And again, we're not dealing with so many pairs, just a few, just one GBP USD. We study it and milk the market. All right, thank you so much for stopping by today. I hope this was helpful, and I will see you in the next video around the week.